What if I told you the Great Depression didn't begin with panic, but with confidence? Not fear, not desperation, but optimism so strong that millions believed the good times would never end. In the late 1920s, America wasn't bracing for collapse. It was celebrating prosperity. Stock prices were soaring. Factories were humming. Newspapers promised a future of endless growth. Economists confidently declared that major economic crises were a thing of the past. And yet within a few short years, that same world would unravel. Banks would fail. Jobs would disappear. Families would lose everything overnight. Entire nations would be pushed to the brink. And the shockwaves would permanently reshape politics, capitalism, and global power. So how did the worst economic collapse in modern history happen when almost everyone thought it couldn't? Tonight, we're going to peel back the layers of the Great Depression. Not just what happened, but why. And as the story unfolds, pay close attention, because many of the patterns you'll hear sound uncomfortably familiar today. Setting the stage, the illusion of prosperity, 1:30 to 6 o'clock. To understand the Great Depression, we need to start before the crash, in a decade known as the Roaring Twenties. The First World War had ended. The United States emerged as the world's dominant economic power. Europe was rebuilding, and America was lending it money. Industrial production exploded. New technologies, radios, automobiles, electricity, transformed daily life. This was the age of consumerism. For the first time, ordinary Americans could buy products on credit. Installment plans made cars, appliances, and even stocks feel affordable. Spending surged, corporate profits soared, stock prices followed. And here's the key illusion. Rising stock prices were mistaken for real economic strength. Behind the scenes, cracks were already forming. Wages were not keeping up with productivity. Wealth was becoming extremely concentrated. Farmers were drowning in debt. Overproduction was outpacing demand. But Wall Street didn't care. Banks lent money freely, not just to businesses, but to everyday people who wanted to invest. Buying stocks on margin became normal. Investors could borrow up to 90% of a stock's value, betting that prices would always rise. This created a dangerous feedback loop. Rising prices attracted more investors, gives more borrowing, gives even higher prices. It wasn't growth, it was leverage. And leverage always demands a reckoning. Origins, the systemic flaws, 6 o'clock to 12 o'clock. The Great Depression was not caused by a single event. It was the result of systemic failures stacking on top of each other. Let's break them down. First, inequality. By the late 1920s, a small percentage of Americans controlled most of the wealth. The majority had little savings. When trouble came, there was no cushion. Second, weak banking regulation. Banks weren't just holding deposits, they were gambling with them. When markets rose, profits were privatized. When markets fell, losses spread to everyone. Third, overproduction. Factories produced more goods than consumers could afford to buy. Unsold inventory piled up, profits shrank. Layoffs began, quietly at first. Fourth, global imbalance. The world economy was tied together by debt. Europe owed America. Germany owed Britain and France. The system depended on constant U.S. lending. If America sneezed, the world caught pneumonia. And then there was the Federal Reserve. Instead of stabilizing the system, the Fed raised interest rates in 1928 to cool speculation, making debt more expensive and tightening money supply at exactly the wrong moment. The foundation was brittle. All it needed was a spark. Rise the bubble peaks. 12 o'clock to 17 o'clock by 1929. The stock market had become a national obsession. Taxi drivers gave stock tips. Newspapers published daily price charts. Fortunes were made overnight, at least on paper. But beneath the euphoria, smart money was quietly exiting. Corporate profits began slowing. Some insiders sensed danger. Selling increased. Then came October 1929. On October 24th, panic hit. Prices fell sharply. Investors rushed to sell. Bankers temporarily stabilized the market by buying shares, creating the illusion that the worst was over. It wasn't. On October 29th, Black Tuesday, the bottom fell out. Millions of shares flooded the market with no buyers. Prices collapsed. Fortunes vanished in hours. Margin calls forced investors to sell at any price. The stock market crash didn't cause the Great Depression, but it exposed and accelerated every weakness in the system. Confidence shattered. And when confidence disappears, economies freeze. Breaking point from crash to depression, 17 o'clock to 24 o'clock. After the crash, policymakers believed the damage was contained. They were wrong. As stock values collapsed, banks failed. Depositors rushed to withdraw money. But banks didn't have the cash, it was tied up in bad loans and worthless stocks. Between 1930 and 1933, over 9,000 U.S. banks collapsed. Businesses lost access to credit. Factories shut down. Unemployment surged past 25%. In some cities, it reached 50%. Farmers lost land, families lost homes. Soup kitchens became lifelines. And the global economy followed. International trade collapsed by more than 60% after countries imposed tariffs to protect themselves, especially the infamous Smoot-Hawley tariff, which triggered retaliation worldwide. Instead of recovery, the world spiraled deeper into contraction. This wasn't a recession anymore. This was a depression. Society under pressure, 24 o'clock to 31 minutes and 0 seconds. The human cost was devastating. Millions wandered the country searching for work. Shantytowns, mockingly called Hoovervilles, sprang up. Hunger became routine, but the fallout wasn't just economic. It was political. Desperation eroded trust in institutions. Democracies faltered. Extremist movements gained traction. In Germany, economic collapse helped pave the way for the rise of Adolf Hitler. Globally, the Depression reshaped geopolitics and set the stage for World War II. Economic collapse doesn't stay economic for long. Failed fixes, and what finally worked, 31 minutes and 0 seconds to 38 minutes and 0 seconds. Early responses made things worse. Governments cut spending to balance budgets. Central banks tightened money supply. These moves deepened the crisis. Relief came slowly and imperfectly. In the U.S., Franklin D. Roosevelt's New Deal expanded government intervention. Public works, financial regulation, social safety nets. It stabilized parts of the economy but did not fully end the Depression. Ironically, it took World War II massive government spending and full employment to finally restore economic momentum. The lesson was painful but clear. In systemic collapse, austerity can be fatal. Modern parallels history rhymes. 38 minutes and 0 seconds to 45 minutes and 0 seconds. Now here's the uncomfortable question. Could it happen again? Today we see familiar patterns. High asset prices, record levels of debt-wealth concentration. Global financial interdependence, markets driven by speculation and leverage. Before 1929, people believed markets were self-correcting. Before 2008, they believed housing prices never fall. Before every major crash, there is a reason why this time is different. It never is. History doesn't repeat, but it rhymes. Conclusion, takeaways, and warning. 45 minutes and 0 seconds to 48 minutes and 0 seconds. So what does the Great Depression teach us? Takeaway 1. Crashes are rarely sudden. They're slow failures ignored for too long. Takeaway 2. Confidence can be more dangerous than fear when it blinds us to risk. Takeaway 3. Economic systems reflect human behavior, and human behavior doesn't change easily. The Great Depression wasn't inevitable. It was built, decision by decision, assumption by assumption. And that raises a final question. If the same patterns are forming again, will we recognize them in time? Or will we only understand, once the crash is already behind us? Call to action, 48 minutes and 0 seconds to 49 minutes and 0 seconds. If you found this breakdown valuable, hit like, it helps this channel reach more curious minds. Subscribe for deep dives into hidden economic history and the forces shaping our future. And comment below, do you think the next great crisis will look like the last, or something entirely new? Because history is always watching, and it's waiting to see if we've learned anything at all.